The chart out there, yeah, that stock is doing quite well. Bidla Corp, well, we said the numbers did see some pressure. The EBITDA per ton is the lowest that we've seen in multiple quarters, so that stock is down more than 5% in trade. JK Cement, well, the first tick was in the red, but that's quickly recovered as well. The key reason is on a sequential basis, you have the margins more or less stable. That's Bidla Corp. Pull up JK Cement. Now that one has moved into the green. And Paytm, well, that one has opened up with a cut of closure around 2% or thereabouts. Anuj.
Oh yes, the stock of the morning clearly is GNFC. That's locked on upper circuit, temporary freeze. Remember, it's an F&O stock now, so there will be temporary freeze that will happen on GNFC, and that's what it's doing. So that's the stock to track. Samir Arora is joining us, founder and fund manager at Helios Capital. Samir, good morning. Thanks a lot for joining us. Samir, first, since you've seen many such cycles, how should investors now approach this market? The kind of data that we're getting from the US and the kind of rate hikes that one will have to, see this year in terms of the valuation reset, in terms of fund flows and all. What would be your big market call now?
So I think this year is going to be a tough year in terms of making too much money. And that is because clearly one is headwinds in the US, which I used to always think that, okay, interest rate hikes we can see and handle in the US, but the catch-up required is too big, too large. And even if we say that some of this inflation, which we thought in our positive good spirits was transitory, it's not going to come down so easily from a 7% kind of number. So the US thing is quite a sort of a headwind, where India is outperforming and can outperform, but can it be massively up if US is down or flat or something like that? And in India, in the short term, I think this LIC overhang is there because it's too big an amount for a 1-2 month window. Plus, I think that the new IPOs are gone for a 6. So if that stops, the stress in the private market, where many of the companies may have been waiting for further funding or IPO exits, that is going to clog all those guys.
Samir, hi, good morning. Good speaking to you.
Hello, hi, long time.
Yes, long time. Hope you've been well. The best part about the earnings season this time is that the banking earnings have been solid, right? Every bank we've spoken to, whether it's private or PSU, has said that the worst of the asset quality pressures are behind us and growth is picking up. Is it a good time to be putting more money to work here?
Well, our top 3 holdings are all banks, which is ICICI number 1, State Bank number 2, and HDFC Bank number 3. Not because we sold HDFC Bank, but because we kept buying the other 2 and because they have done well. So we will be the first ones to say yes, that the banking sector and even generally financial sector is doing well. And also in today's context, when there is some linkage with US and the fact that high PE stocks are not doing well or should not do well in this new environment, or that the tech sector is somewhat connected at some level, then if you want to go into slightly more sedate sectors where the valuations are what they may have been 2, 3, 4 years ago, then this sector is still giving that kind of opportunity or value in your mind a little bit, that you're not buying either the very high PE consumer type companies or you're not buying the absolutely connected with the US tech with new money, I'm saying. So that way it is fair for both angles, yes.
Hi, Samir. Morning from here in India.
Hi.
Well, Samir, I wanted to ask you about some of these new age companies. The second half of 2021, everyone was so excited about these companies. Some of them came at very peak valuations. Some of the stocks are either down 40%, some of them are even half. Would you give them a second look?
In US?
No, you're in
US
India.
Or in India?
No, you're in India.
India, some of them will go to zero, I think. But the good thing that, say, a Paytm kind of company has done for itself, even though the stock is down, it has nearly ensured bankruptcy of many other fintechs and an inability of the others to go public. So in some sense, it has achieved a strategic objective. But, the question with some of these new age companies, and even I think with some of our consumer type companies, is that if you say that the stock will fall 20%, let's say, from whichever point you are buying it or from its IPO, would you think it is cheap? So I found that for many of these companies, even when starting, we said it falls 20%, will look cheap, then you can, in your mind, feel that somebody else will buy it. And you could not have justified that for many of these companies. Now, all of them haven't fallen, actually, according to me, 40, 50%. So I don't know which are the other ones you're counting. But in the US, I have seen many companies do that. And even in India, if I look at some of these staple companies and say, oh, it's trading at 75 times. let's say it falls 20%, and therefore it becomes 60 times. Will it look very attractive, highly attractive? No. So that is the issue, that in some of these companies, there can be massive gaps before some other guy with a slightly different view who did not buy it at the first price will be willing to buy it at the new price.
Samir, you know what, I would have loved if Paytm management would have responded to your jibe, but they are refusing to come on CNBC TV18. Let me put this on record. We've invited them to discuss their numbers, but they don't want to come on CNBC TV18. Up to them, of course.
It's not a jibe. It's not a jibe. Actually, it is a reality in another context that 5 years later, there might be only one left.
No,
but in some sense, it is a jibe. But that is how every company is connected to another company. Just to quickly tell you a story. So in the olden days, the Sony CEO came to me in '99 when I used to be a big holder of Z and said, Z, this is wrong. That is wrong. I said, every morning pray that Z does well, because whenever you go public, if you go public at that time, they were planning to, it will be connected with the price of Z.
No.
So it's the same thing with Paytm. All these other guys, whatever they can say.
I take your point, Samir. Of course, I am saying this as a neutral party, so obviously, I'll have to measure my words. Now, yeah. So, Samir, now. The other theme which a lot of people are investing in now is the capex theme, and of course there was a lot of focus on the budget as well. And my mind goes back to 2004 to 8 cycle where these stocks did really well. Larsen was the go-to stock. Do you think that could repeat this time as well?
So we have Larsen in a meaningful way, but otherwise we have not tried new capex related theme, hoping that our banking sector and all that will indirectly be able to participate in it, just because the change has been so fast and because the history of the last few years has been so bad in terms of buying capex related stocks. But in a big picture sense, it is possible. It's just that this year is not, according to me, the market context is not like 2004 to 7, because that came from 2 or 3 very bad years, and the US not being sort of a drag on the world. I would say that once you think, like I think, that the return this year will be, say, a 15% kind at best return, you are more willing to buy stocks which only give that kind of return, but with some more assurance. Actually, according to me, ITC might be better than many of these. Because in today's context, you are not hoping for 30-40% return, in which case you will say, let me buy turnarounds and companies that have done badly but will do well. I'm thinking that the market will give only 12-15% return, and very few companies will give 40-50% return, except some. Obviously, some will, in hindsight. But a 15% kind, slightly higher assurance stock is also fair.
Okay, so what are the pockets that you think could sort of outperform the markets now? Because, there are so many big themes playing out, right? I mean, there's this whole renewable energy space. There's a big push for electric vehicles that was announced in the budget as well. Any of these themes that you like?
None of them are themes. None of them are themes. It's very simple. Just look at the US stocks and see whether they are doing well or not. Or those stocks, any new kind of company. Don't keep looking at Tesla kind to say EV. If you look at these new companies, the new startups, the loss-making companies, all of them are doing super badly. You look at green energy, all of them doing very badly. Look at the SPACs, all related to this, doing super badly. Anything which is just a concept, or basically in our case, we don't like this green energy and all that because the customer is the government, and the government is not changing whether you're selling them green energy or normal energy. So you look at the SPAC from an Indian company, I think it's half the price. So there is no need to do all that. Just according to us, some companies where the return expectations are low, but the valuation is also low. On the margin, we are talking, because we are not changing the whole portfolio. On the margin, we are buying more sort of away from what we normally like, other than in financials, where we are willing to buy State Bank even now, even though it is our second largest holding. There is no need to try these new things right now, because the new is what is being attacked. Because the new had a lot of expectations and a lot of money coming in. And I think that is getting clogged in the US. And it's just a matter of a few months that it will happen in India, where somebody will not get new funding and will have to do a down round, or his IPO will not happen. I don't think anybody's buying any of these new age IPOs for the next 3-6 months.
All right. Samir, what about real estate? Are you in the camp that believes the best is yet to come?
Yes, we like real estate simply because 6, 7, 8 years, the stocks have not done well. Real estate has not done well. And you can say that the purchasing power of the public has gone up, and they are willing to buy more bigger houses, and the interest rates are generally low. So yeah, we like real estate, and we have 2 stocks. Yes.
Okay, Samir, the big mid-cap IT party, do you think that's at risk now? Considering that now, you'll have higher interest rate scenario as well, and a lot of these mid-caps have benefited from, ultra low sort of interest rates. So, what would be your view on some of these names?
See, the tough thing this year is, which happens many times, is that your earnings may not fall. So you'll say, oh, this company is growing its earnings at 25%, and it was supposed to grow at 25%, or maybe it was supposed to grow at 24%, it grew at 25%. So what do? The question is, nobody exactly knows whether the stock should have 45p or 40p.
Exactly.
But we know, and that way we have also reduced a little bit of whatever we had, like 2-3% to buy these other things. Yes, I agree that the tougher thing will be what should be the valuation for these very high P re-rated companies that are up 70-80% per annum for 2-3 years in India.
Yeah.
And the earnings growth will still be good.
Yes.
And as it was expected maybe 3 months ago also. So yeah, this is a tough one. Where on the margin we are saying let's not buy more, in fact trim a little and buy something more steady, because my view, 15% would be a great return this year.
Okay. You were just telling Nigel that real estate is a space you like. How do you deal with a situation like Goldrich Properties? I mean, they went ahead with, they first announced that deal with DB, then they called, they took it back. Would you be concerned that such things should not happen in the first place, or would you give it high ranking on corporate governance because they listened to shareholders and took back the decision?
So we don't own the stock, and I heard you saying, and I agree that it has very good corporate governance, but this is not a positive. It is a negative, because there is a cost of doing business when you say that your corporate governance. You can't say we have good corporate governance as long as it doesn't affect our growth plans, are resisting somebody's pressure, are resisting the environment. Then we don't have good corporate governance. Otherwise, we have good corporate governance. So it shows that it's okay, and I think it's a negative, but I don't have the stock, and I don't know what is done today. But generally, corporate governance sometimes should have a cost for it to be called good corporate governance.
Okay, final question.
You should refuse some business, refuse an opportunity, fight with the world. That is good corporate governance.
Okay, all right. Let me squeeze in one quick question on the pharma pack. Samir, many of those stocks, they are lagging. Sun Pharma, I think, is the only one that's near the 52-week high. Otherwise, the rest of the pack, they haven't been doing too well. Are you looking at this space? Would you be looking to get into some of these stocks if they dip more?
So, we have these stocks, and I keep fighting with our team that we should not have so much pharma. Like we have 8-9%, but Mr. Irani, who's our for 20-year pharma analyst in Alliance, and then Helios says it's good. So we have it. We are not going to add so easily right now, because they have really pained me for 1 year, and I am a bit upset with them.
Okay.
Not with Mr. stocks.
Okay, next time we get Dinshaw, we'll ask him as well.
Yeah, please ask.
Okay, thanks, Samir. Always a pleasure to talk to you, and you hit a couple of balls out of park today. Thanks a lot. Look forward to future.